Hello, everyone. Good afternoon, and welcome to Money Owl's Facebook Live this Wednesday afternoon. Seeing a few of us just joining on Facebook. Now, welcome everyone. Thank you all for coming online, coming on Facebook Live to attend this session of sharing on the topic of unlock the door to your financial wellness. Now, as we wait for some of the other participants to stream in, I'd just like to introduce myself, as today it will be a Facebook Live session. So not to worry if you come in later, right, and you find that you missed out some of the contents from the start, right? So yeah, just a point to note, today's session will be available on our Facebook page after the session is done for today, right? So without further ado, thank you all, those of you who are already online with us, right? So I shall do a very quick introduction of myself for those of you who have come across Money Owl before, and today this is your first time hearing about us. Allow me to just quickly introduce who I am. My name is Albert. I'll be taking all of us through today's sharing session. I'll try to keep it short and sweet within an hour, right? I'll hope to share with all of us as much as we can. But today with me, I also have my team of client advisors, and they are live on the Facebook, right? So do feel free to make use of the Facebook chat function, the comments function, to post any questions to us, and we will try to address them immediately as much as possible, right? So I do have a team of my colleagues on standby as well, and I will be trying to keep to the time frame for today, right? So once again, welcome everyone, right? Allow me to just quickly get us started, right? So as with all of our sharing sessions, our webinar sessions, right? This is a very standard disclaimer, right? Just to make sure that we understand today's session is going to be more of sharing of information, right? If you do need to act on any of this information, please do check in with the relevant professionals before making any of your decisions, right? Now, allow me to just introduce who Money Owl is, especially for those of us who are hearing of Money Owl for the first time. Thank you all for coming online to check in on our Facebook Live, right? So if it's the first time that you are hearing of who Money Owl is, right? Who we are. Basically, we are the 10th NTUC social enterprise, and we are very young, only 3 years old. We just recently celebrated our third birthday, and we are a joint venture between NTUC Enterprise and Provident. Now, Provident is Singapore's probably the only fee-only financial planner in Singapore currently, right? And they have a very long history of doing this mode of financial planning, right? So I liken it to like a doctor's visit for those of us who are new to this model of operations, right? So today you pay the doctor a visit, right? You will be charged a consultation fee, right? And subsequently, depending on whether or not there are medications being prescribed, thereafter the costing will be separate. Now, we are a joint venture between NTUC Enterprise and Provident, and the purpose of Money Owl really is to provide comprehensive and conflict-free advice to all our clients. Now, what do we mean by that comprehensive? I will be sharing through today's session, and how do we keep ourselves conflict-free and and competent. Now, we are not tied to any banks, and neither are we affiliated to an insurance company or venture capitalists, right? And we are being supported by fully salaried staff, including our client advisors who are on hand in the Facebook chat session today, right? So they do not earn a commission, and later on I'll be sharing a little bit more in detail, right? So really the purpose of Money Owl is to help ordinary working families like yourself to live a more fulfilling life. And how do we do that? Through a comprehensive, competent, and conflict-free financial planning. And that is the reason I think why most of us are tuning in today to find out what is it all about, right? So perhaps for me to get started, to introduce to us, what is the concept of financial wellness? What is financial wellness? Now, perhaps allow me to share with all of us how we define financial wellness in Money Owl. Now, there are really three parts to it, right? The first is that if you are looking at financial wellness, it is about having sufficient and reliable means for you to be able to live meaningfully now and also into the future, right? Because life starts today. It doesn't start tomorrow. It doesn't start at 50, 55, nor 65. And the third part of this equation is really you need to have the confidence of achieving these goals, right? These financial goals, no matter what happens along the way. And this is really the gist of what financial wellness is about, right? And unfortunately, when we are looking at financial wellness as a country, right, recently, a couple of years back, OCBC actually did a survey and they found that 1/3 of us, working adults, right, out of these 2,000 that were surveyed, we actually are not saving enough for our retirement. Now, half of the working adults that were surveyed, they actually do not have a 6-month emergency fund. That means to say today, if they go out of a job or if something happens to their income, they are unlikely able to survive for the next 6 months, paying the bills and such. And more alarmingly, 75% of the working adults who are being surveyed happen to be not on track with their retirement plans. Then there's majority of the working adults that is surveyed, right? So you might be asking, right, is financial wellness for me? Today, there are three possibilities, right? One is we have very young working adults, right? Today, you just started working. You probably feel that you want to enjoy your life first, right? You probably would put financial planning or retirement planning as a backseat, right, at the back of your mind, because you're still young. But we need to be mindful that because of your youth, right? Because you are young, you have a very long runway, and your time is really your biggest asset, right? It is your money. How about a situation whereby you are approaching your retirement years? Now, a lot of times when we talk about retirement planning, there is a very big misconception that today when I approach my retirement, let's say today if I am 62 or 65 years old, once I hit that age, right, immediately everything stops. But we fail to realize there is actually a long runway ahead in our retirement years as well, right? So there's really a lot of planning that needs to be done in your retirement years as well. So planning isn't really just for young people, neither is it for the rich people. Why? Because today you may tell me that, I'm not earning a lot of money, right? I do not have a lot of extra cash lying around. I really don't have the means to go about doing planning. Now, let me assure all of us who are with me today on our Facebook Live, right, that at least with Money Owl, financial planning is not equals to buying a product, right? It's not equals to buying a product. Now, I will share further, more in detail as I go on today's session. But regardless of the phase in life you are at, financial wellness is for all of us. Now then, if we are convinced that today I need to do something about my planning, how then should I get started? Now, for most people, right, this is the very conventional way of doing things, right? We go about asking our friends, asking our family, asking our colleagues, what do they have? What have they invested in recently? What have they bought, in terms of insurance planning, or whether or not they have any good deals out there? But we fail to realize that these supposedly good products, right, may not be a good fit in our plans, right? So our plans are likened it to building our own house, right? So let's say today we are building our house. We want to make sure that the things fit, right? The furniture fit. We don't want to be collecting this sofa, this beautiful sofa, right? Because my friend said that it's fantastic, it's very good, top quality materials, it's fantastic. I don't want to be collecting good products. I want to make sure that I plan comprehensively. I want to work with a designer, right? I want to work with an interior designer who has the links to the contractors, right? I want to make sure that I plan comprehensively for my home. And how do I do it? I want to do it in a very systematic way, right? And firstly, I want to make sure I take the proper measurements of my house. Yeah, I want to make sure that whatever I am going to put into my house, it's going to be a good fit. Not just the cost, but also the theme, right? Because some of us may like, industrial theme. Some of us may prefer minimalistic, and some of us may have other kinds of preferences. Now, not everyone is not one product is going to be a good fit for all kinds of people, right? So we all have many different needs in our lives, but we all earn a limited dollar of income, right? So how then can we balance all these needs that are competing for our limited financial resource? And as we grow, there are also different seasons of our lives. Now, what do I mean by that? So basically, today you can be a young working adult, just step into the industry, right? Working adult, and you're looking to maybe settle down. Some years later, maybe you are looking to buy your first property, or you could be in your 40s or 50s, approaching a peak in your career. Your children are grown up and they're looking into your children's education, or you could be a near retiree approaching your retirement. Now, at these different phases of your lives, there will be different needs that need to be addressed, and there will be different risks that are involved as well. Now, in this comprehensive plan, as much as possible, we also want to make use of whatever is available to us right away today, right? These solutions can be also in the form of non-commercial solutions such as CPF and budgeting, as I will share in a bit. Now, perhaps for us to get started on this journey, I just want to share with us this concept of our personal money equation, right? All of us working adults, we all have this personal money equation, and it starts with our income, right? It starts with our income. As we work and earn an income, we have various needs to fulfill, right? And we have expenses such as our fixed expenses like our bills, our mortgage, right? We also have variable expenses such as our groceries, our transport, and so on, right? Thereafter, we are left with a surplus, hopefully surplus, whereby we can save towards a future, right? Towards our goals. And we move over to the other side of the equation, whereby we bring this savings and this surplus over to look for something to grow this wealth, right? This surplus that we have. And this will be this could be in the form of retirement for most people, right? We eventually hope that we will be able to retire comfortably. For those of us who are parents, possibly our future financial goals do include our children's education as well. Now, let's not go into the details of what are the instruments that will bring us there, but let's understand the whole concept of this first. I want to share with us that the left side of this personal money equation is your short-term financial planning. Now, this is the part that will help you become rich. In a sense, inverted commas, rich, because everyone has a different definition of what rich is, right? To some people, $10,000 is very big. To some people, $1,000 is very big. But everyone has a different definition. So in that sense, financial planning helps you become rich. It is also the side of the equation that you have better control over, right? Because straight away you can realize that your expenses is very easily controlled, right? Your income, you can have multiple streams of income, you can do part-time jobs and things like that. And then we move over to the right side of the equation, whereby this is your long-term investment strategy, right? And this is the side that helps you continue to stay rich, right? It helps you keep pace with inflation and helps you reach your goals depending on how much returns you actually need. Unfortunately, this is also the side that we have less control over, because once we have invested our money, it is in the markets, right? And we have very little control over how the markets are going to react day to day. Now, in terms of our income, what can we do to better our income, right? Of course, we want to be the best in what we do, right? Today, if you are an employee, you want to go for your promotions, you want to make sure that you are doing things that are above and beyond your day-to-day role, right? Your job role. You want to also stay relevant in the sense that today, do not just be restricted to your job role itself, right? Say today you are a programmer, right? You are a computer programmer, and perhaps you are thinking of improving yourself, going for part-time courses. Do not just restrict your courses to your skill set itself, right? You can go for upgrading in other aspects of life as well, right? Pick up a skill, something that you can probably become very good at, right? Even go for cooking lessons and things like that, right? And definitely when it comes to our income, we also need to be very mindful to make use of the appropriate type of insurances, suitable and low-cost insurance, to protect our loss of income, as I will explain a little later. As we come to the savings and expenses, I just want to share with all of us, definitely we are looking at managing our expenses, lowering the debt if possible. In terms of debt, probably most of us in Singapore today, our biggest debt liability will come in the form of our mortgage, right? So would it be a good time to consider refinancing or repricing of your mortgage packages, right? That could be a way of lowering your debts as well. Definitely, we want to have an emergency fund, and please adopt this method of paying yourself first. What do I mean by that? As your income comes in, set aside the savings before you go and spend, right? Spend with whatever you have after you have set aside your savings. Thereafter, you want to move over to the right side of the equation, whereby you want to look at, right, what are your available resources as of now, guaranteed basis, accumulate through CPF. And also, you want to invest if CPF alone is not sufficient to help you meet your long-term needs. Now, how then do we get started once we fully understand our personal money equation, right? The first step, as with building a house, right? You want to make sure your foundations are strong. And this is also how we do it at Money Owl, right? And that is the first step, our financial health check. Now, most of us are familiar with the idea of a health screening, right? And we go for a blood test, we go for different types of packages of our health screening, and we will have various measures of our health in this report that is shared to us, depending on whether or not there is any need for us to take any action. Typically, the doctors will advise us, of certain lifestyle changes. Similarly, in a financial sense, right, we also have a financial health, and these are various financial ratios that we can take a measure of how healthy we are currently financially, right, and whether or not there are any lifestyle changes that we need to make, right, to make sure that we are nursing ourselves back to financial health. Now, if we are financially healthy, we are ready to go with the next step. And the next step is really to fail-proof our plans, because we can plan as much as we want, but today, if we lose our income for whatever reason, what are the key risks that could cause us to lose our income? We're talking about death, we're talking about disability, we're talking about your long-term disability, critical illnesses, such as all these life risks. This could cause your plans to fail, right? And may I share with all of us, in Money Owl, we have a very simple philosophy to follow when it comes to buying insurance. We want us to buy as much insurance as we need, but pay as little as you can. Now, if we follow this mantra, you will not go too far off. Why? Because the role of insurance really is just to protect. protect against the loss of income and also possibly medical expenses, right? And insurance sometimes can be used as tools for investing, tools for savings, but they are really not ideal because insurance as a tool for investing and saving typically is very, very high cost that translates to low returns and oftentimes are very rigid in terms of their structure. They do not give you the flexibility of what investment does. So we recommend using low-cost term insurance, which I'll explain in the next slide. Because for most of us, working adults with dependents, if we were to make use of a whole life plan, for example, it is going to be very expensive for us to make use of a whole life plan to fully cover our needs. Allow me to share this timeline with all of us, and this is representative of all of us, right? As we are working, we have built up a certain current assets today, yeah, and as we are working, we are earning an income. Our income is our most important financial asset that helps us build towards these future goals, right? Now, today, if I am in my working phase, right? If I'm still accumulating towards my goals, if a death were to occur, if a disability were to occur, or a major illness were to occur, right? Any of these three life risks, and as I'm earning an income, I will need to protect the loss of income, right? So today I will need to have an income replacement if any of these three things happen to me in my working life. Now, let's move to the right side. As I approach my retirement, if the same three things happen to me, death, disability, a critical illness, because I no longer earn an income, I do not have to protect this income, right? So income replacement will not be needed in my retirement because I do not have an income to protect. But remember, I mentioned there is also another thing that we need to protect against, which is medical expenses, right? We do not know when we are going to fall ill. We don't know when we are going to be met with a big hospital bill. Therefore, in my working phase, I'm going to need insurance cover for medical expenses. What if this big hospital bill comes when I'm retired? Similarly, I will need these medical expenses to be covered as well. So to sum up the insurance needs of a working adult through retirement, if we are protecting ourselves against income loss, right, the loss of income, may we suggest for you to protect yourself until your planned retirement or when you no longer have any dependents, whichever comes later, right? Now, dependents can be in the form of your elderly parents, can be in the form of your young minor children as well. How about for medical expense cover? We recommend that this has to be a permanent need for as long as you're alive because we do not know when we are going to fall ill, when we are going to be met with this big hospitalization expense. Yeah. So then, a lot of times when we talk about planning, right, there are a few major financial goals that we all have in our lifetime. The first one, as you approach, adulthood, as you approach, settling down, building a family, you want to buy your first property, right? As you have children, you want to build sufficient resources for your children's education. Then you're looking into your own retirement as well. What should be the sequence in which you go about planning, right? There needs to be some method in your planning as well. And if you were to do planning at Money Owl, we will be recommending according to your life stages, what is your current situation, and we will decide which is the most important for you to take action on first, right? So we need to rank your priorities and we need to know them. Now, if we are going to be looking at retirement planning, right, there is basically three must-haves that we need to look at in our retirement. The first is, if we were to retire, right, we want to make sure that we will have a fully paid home for us to live in a roof over our head. And in Singapore, most of us, we make use of CPF. Some of us, we make use of cash as well. Some of us, we make use of a combination of both CPF and cash to pay for this housing, right? The second part of this must-have is a suitable medical insurance to make sure that our healthcare is taken care of. All of us in Singapore, right? If you have CPF, you would already have the basic government cover, right? Which is the MediShield Life. Should you have a requirement for a higher class of a higher level of care, you will then need to make sure that you buy the appropriate type of private shield plans as well, private medical insurance. Lastly, what is the most important? Of course, you will need to have money to fund your lifestyle in your retirement, right? What forms the basis of these income streams? At Money Owl, we recommend to build this safe retirement income floor with our CPF. So depending on how old you are, there will be different buckets of CPF you're going to be able to make use of, right? From 55, your ordinary and special account. From 65, CPF Life will start paying out as well. Now, for those of you who have certain annuity plans, retirement income plans, the guaranteed portion of those plans are going to form this safe retirement income floor, which is the guaranteed basic, right, which will fund your basic lifestyle needs. And should you have a need, which most of us will, right, there will be a requirement for you to go for other forms of investments that will help you build this other layer of income as well. Right. So these are really the three things that we must have in our retirement. And looking at how CPF fits into these three must-haves, right, we are in a better position for us to go and plan, right? So looking at what we already have. Now, I want to give us a little bit of confidence that today, if you just do nothing, right, just by being in CPF alone, this is what you're looking at, right? So assuming today you have turned 55, 2021, and this year our CPF full retirement sum is 186,000. From 65 onwards, which is 10 years later, you're looking at a payout of about $1,500 for the rest of your life. And that is why it is called CPF Life, okay? And today, if you are a couple, a retired couple, and both of you, you and your spouse, both have a full retirement sum of 186,000 in your CPF, by just relying on your CPF alone, you are looking at a household income of $3,000 per month for the rest of your lives. Now, $3,000 may not be a big sum of money, but for some of us, it may be sufficient, right? If you have the ability to do so, you can also choose to bring your CPF up to the enhanced retirement sum if you are above the age of 55. And with the enhanced retirement sum, you are looking at about $4,000 per month per household for the rest of your life from 65. Now, it's not going to be a luxurious lifestyle, but I think for most of us listening in today, even if you have never done any planning in your life before, you have never invested, no endowment policies, nothing, just with the CPF alone, just by taking care of the CPF will in turn take care of you in your retirement years, right? And when we talk about CPF planning, using CPF in our retirement plan, it's really not about investing. And I want to be very clear about this, right? Because there are many people out there who tell you, CPF is locked up, please go and invest for higher returns, the CPF interest is not enough, things like that. You will hear a lot of this going around, but please be very clear. When we talk about using our CPF in our retirement planning, not everyone is suitable for investing their CPF. Now, it's nothing to do with your risk appetite, but it's really down to your personal life stage and your personal situation, right? Today, if you are a young working adult, you're looking to potentially buy buy a house, right, in the next few years, or you are looking to set aside a buffer for your monthly mortgage. Now, most of us, we use our CPF for our mortgage repayments, right? Putting our CPF in investments, CPF money in investments is going to be is going to limit our liquidity, right? But then again, on the other extreme, right, we are not saying everyone should, put your money and go and top up your CPF. Why? Because be very careful. CPF top-ups are one-way street. Once you put the money in, you have to wait until you're 55 or 65. Right? So be very, very careful when we talk about CPF planning, right? It is not just about investing. Investing is really what I like to call a sideshow, right? And today, if you happen to have a little bit more surplus, then we can talk about investing our CPF, right? And allow me to share an actual client who came to us for planning, and let's give her a name, Nancy, right? She's female, age 42, and she holds a job as a cashier. So she earns about 1,500 every month active income. Now, incidentally, in her case, she unfortunately her father passed away and left a HDB flat to her, and she also is collecting rental from this one room in a HDB flat. So she collects about $800 in rental income every month. Now, her sister is doing missionary work and is not getting any income, so she does provide a monthly allowance to her sister. Now, when we look at her emergency funds, she only has half a month of emergency funds, which is quite worrying for someone in her situation. But the good thing is, because she has been working for quite a number of years, her CPF balance is about $108,000. Now, my colleague Colleen met with her, and this was the recommendation that was done. And I want to give us the assurance that today it is really, when we talk about planning, right, there will be situations whereby no products are being sold. And let me share with us this example. So when we look at managing her cash flow for Nancy, right, we are considering for her to reduce how much she's giving to her sister, right? We structure a way to help her have a disciplined way to save towards this emergency fund, right? So she will take a long time, 6 years, right, by saving $95 every month to help her reach her emergency fund. And then we look at her insurance planning, right? Because she really has no dependents, she's single, not married, no children, right? Sister really doesn't need to rely on her for livelihood. Therefore, we have excluded death in her recommendations. In terms of hospitalization, she's well covered under MediShield Life because she's able to claim under MediFund as well. This will build her safe base for hospitalization cover. In terms of critical illness, there is a slight gap, and we want to look for the cheapest possible way for her to get covered at about $100 every month. Definitely, in her situation, not recommended for her to do any investments as of now. Now, looking at Nancy's CPF, right? These are her actual balances. So she has about $42,000 in an ordinary account. She has about $35,000 in a special account and about $30,000 in the MediSave. So total combined balances of about $108,000. And we, with great accuracy, are able to predict for her, once she reaches the age of 55, this will be her balances, $276,000. But at the same time, we also know when she reaches 55 years old, the retirement sums are not going to be today's retirement sums, right? So her retirement sums are going to be $133,000, $266,000, and $399,000 accordingly. So you realize that she barely, has enough retirement sum, barely enough in her ordinary and special account to meet the full retirement sum. However, once we do the calculations, we realize that she's able to get a monthly payout of about $2,000 from 65 for life. Allow me to translate that to today's dollars. That is about $1,300. Now, remember in my previous slide, she's earning a monthly income of about $1,500. So this represents a pretty good replacement of her income in her retirement, right? So she does have something positive that she can look forward to just with her CPF itself, right? And I just want to introduce to us at Money Owl, we have a proprietary CPF analyzer with great accuracy that has these abilities to predict the changing contribution rates as you go into different age groups, different allocation rules, right? What are the rules of the accounts? What are the limits of the accounts? What happens when your account reaches the caps, right? Do you have any withdrawals? Do you have any top-ups? If you are on a resale housing, right? Whether or not your CPF withdrawals will reach the withdrawal limits, right? Whether or not you will reach the top-up limits as well. And of course, at the end of the day, we want to project your CPF life payout starting from all ages, right? With a very, very good accuracy. Now, then we move on to one of the final few steps, which is really to grow your wealth. And may I introduce to all of us the investment philosophy that we have in Money Owl is really that investments are there to serve our financial plan. Therefore, we want to make sure these investments provide us with the sufficiency and reliability for us to meet our goals. Shouldn't be about the maximization of returns. Right? Now, of course, this can be for your other needs as you go along as well. Now, of course, we want to make sure our investments are well diversified. We don't want to be taking bets on our retirement planning investment as well. We don't want to be timing the market, right? By timing the market, what do I mean by that, right? We want to buy low, sell high. We want to do active trading and things like that. Of course, at the end of the day, we want to make sure our investments costs are being kept low. Then once we understand this, we are able to therefore stay invested because why? The stock market always recovers in the long run. Why do I say that? Allow me to share. This is the MSCI World Index over the past 50 years since 1970. Now, let's say today if I have $1 and I've started, investing in the MSCI World Index, you will realize there have been so many geopolitical events that have happened, natural crises that happened as well. Throughout the last 50 years, there have been many, many dips, right? There have also been many rises as well. So the market goes up and goes down, but a disciplined investor really can look beyond the day-to-day noises, right? Because all of these are noises. Once we understand how the markets work, we know that in the long run, markets will go up. And if you have held on that $1 for 50 years, you would have achieved the 800% growth, right? Your $1 would have grown to $80. However, when we talk about investing, it is not just about how much that investment can give me in terms of the returns. Why? Because let's say that MSCI World can give me a 9% return. Now, this 9% can be 7%, can be 11%, can be any percentage depending on when I'm looking at the returns, right? So when I'm cutting the time frame. But in order for me to gain access to this MSCI World, I'll need to use a fund, right? And it could be in the form of an ETF, it could be in the form of whatever, right? So let's say if I'm making use of a fund, there will be fund level expenses that will eat into these returns. And that brings me to the fund returns. But at the same time, when we look at investing, there is also this manner of investment whereby we go in and out of the market, we time the market, active management by the professionals, the fund managers, that eats into the returns as well. And the investor really, is left with a small chunk of the pie when we look at investments. So really, what we use at Money Owl is market-based, non-forecasting, and tax efficient. So you realize that in terms of investment solutions available at Money Owl, you realize that there is not a lot of variety because we are not here to win your assets, right? We are here for you to win in your planning. And that is why very few funds actually make the cut in the Money Owl suite of solutions. Now, I'll allow my colleagues to answer any questions that you guys may have, because I understand today, in the interest of time, there will be some areas where I may not be able to go further in detail as well, right? So do feel free to type in the chat, interact with us, right? Today it's pretty quiet session, right? Perhaps it's 5 in the evening, right? Now, in terms of investing, I also want to share with us, depending on your life stage, there is also different ways for us to look at investment as well. When we are accumulating for our retirement goals, our other financial goals, our key focus should really be on capital appreciation. Because we are younger, we also have the ability to take on higher risk as well. Sequence of returns does not really matter, and I'll explain sequence of returns in a bit. A lot of times people have the misconception that when you approach your retirement, you stop investment altogether. But that is really not the case. You will still need to invest, but you will need to invest in the appropriate type of portfolios that suits your needs. And you'll need to have some form of withdrawal structures in place. Now, allow me to share this sequence of returns risk with all of us. Now, there's a lot of numbers, but you see two very big tables. Now, on the left, you will see a green table, which tells the story of an accumulator who is investing his $100,000 in two potential portfolios, right? So portfolio A, you realize that when he started, there was a negative return. There were several years of negative returns. Positive, negative, positive, negative, all the way through average annual returns 8%. Portfolio B has a positive return in the initial years, subsequently negative and positive again. Similarly, average returns of about 8% per annum. You realize that the end value of both of these portfolios is exactly the same at 684,848. Now, if we move over to the right side, you will see a retiree's investment, similar two portfolios, portfolio A and portfolio B. Similarly, portfolio A, negative in the initial years, portfolio B, positive, negative, both average 8%. However, do take note, for portfolio A of the retiree, you realize because he is taking out a 5% every year, because he has already started his withdrawal, you realize that by the time he hits 81 years old, his 680,000 has gone to zero. Coupled with the fact that market goes up and down, and he's withdrawing in the down market as well, so that eats into his losses as well. Whereas in portfolio B, you realize that there is a very decent sum at the end of year when he is 90 years old, right? So we want to make use of financial planning to mitigate the risk of the sequence of returns. We don't want to be collecting investments or looking at how we manage our investments directly to mitigate this. So there is a very fine line in there as well. So as we approach our retirement, what are some of the risks that a retiree will face? Right? We want to make use of comprehensive planning to mitigate these 5 risks. The number one risk, as all of us know, we are living longer, right? Longevity. Now, CPF Life, at least, in some parts of it, help us to mitigate this longevity risk because payouts are for life. Healthcare costs are rising, as all of us know. So MediShield Life and our Shield plans will help us to address that as well. Now, we also need to be aware of inflation, right? Because inflation will cause our money to become smaller. And as we realize that, CPF Life is a constant payout. Now, we do have an escalating payout plan, but it doesn't really mitigate inflation risk that well. So therefore, there is really a great need for us to invest to beat inflation. But with investing, it carries risk, as I've explained earlier, in the sequence of returns. And if we couple this with undisciplined or compulsive spending in our retirement years, it's going to dwindle on our resources much faster. So therefore, how do we address these risks of retirees? We need to make sure we go through proper financial planning. And as mentioned by Cheng Chi. Good. Thank you for your question. Right? Any financial planning for a retired person, and this is exactly the point that I'm coming to in this slide. Right? We want to make sure that we plan in our retirement years as well. There is budgeting for retiree as well. There is various ways of investments for retirees, various insurance that we need to look at as well, right? Not by collecting this investment, that investment, this insurance, that insurance. Yeah. Of course, at the very last, we want to make sure that when we are no longer around, whatever we have accumulated, all our personal assets, our CPF, our insurances, please make sure that we have an estate plan to minimize on the leakages so that our beneficiaries are able to get the most of what we have worked so hard for, right? Do note that I have highlighted the CPF, right? Because for CPF, we can't make use of our wills, right? So please make sure that we make our CPF nominations, right? Today, you can go online easily, do your CPF nominations, right? So after hearing today's session, please, make use of this opportunity to take action, right? So allow me to quickly sum up what I've gone through in the past 45 minutes or so, right? How do we do our financial planning in Money Owl? Now, depending on the life stage you are at, there are different goals that you are looking to achieve, right? It could be your children's education, it could be your retirement planning, financial independence, it could be in your withdrawal years, you are planning, to leave a legacy for your loved ones as well. In these different seasons of life, you will need to make sure that your plan can keep up, right? So there needs to be a regular review of your plan as well, because your life stage will change. So the question is really, what if you don't do anything today? Now, remember I said, right, CPF alone is going to give us quite a good basis for us to get started with. But really, that is not going to be sufficient for most of us who are on this Facebook live session today, right? So there is a saying, failing to plan is as good as planning to fail, right? Because there are things that will always be there and you are constantly spending money. One day when you no longer earn in your retirement, you continue to spend. And may I ask all of us in this Facebook live session today, have you had any of these delicious foods recently now? So we are in the midst of the durian season towards the end, right? If you're a durian lover, you can spend a couple of hundreds of dollars, right? If you are buying top quality durian. Or if you're a pizza lover, two Domino's pizza for $22. If you're a spicy lover, we have Mala Siam Guo, which if you eat with a few friends, it can easily cost upwards of $20 as well. I have two pieces of good news that I would like to share, two goodie bags that I would like to share with all of us who are on our Facebook live session today. The first goodie bag that I would like to announce is that today, if you are an NTUC member, you will be able to enjoy this comprehensive financial planning service at a heavily subsidized rate, 75% off. So public pays $99, you only need to pay $24.75. If you have bought Mao Shan Wang durian, if you have eaten Mala Siam Guo or pizza, you will be able to afford to plan for yourself. Okay, and I do strongly urge today, if you are an NTUC member, please go ahead and make use of this excellent opportunity to plan for yourselves, right? And how will it look? Really, you're looking at two steps. The first step is the online process, right? So instead of meeting with us, in McDonald's, in Starbucks, or coming down to our office at Keong Sapp, right? You can do this in the comfort of your own home at your own free time, right? So go through the different steps, and this will all be guided to you, right? So today, if you have a child or children you wish to provide education planning for, you key in the necessary details. How much are you spending on a month-to-month basis? How much do you already have? So step by step, we will be guiding you through on our platform. And of course, I think the most important thing would be the integration with CPF, right? So based on your inputs, we're going to accurately help you project what is that CPF layer going to look like. Of course, we need to know how, when you are looking to retire as well, right? And lastly, we want to make sure that the 3 must-haves in retirement is being met, right? And thereafter, you will be presented with a report. Now, this report is just a 30 page, right? Depending on how detailed you want it to be, right? Your CPF will have a few pages, your financial health will have a few pages, your existing resources, your other resources, right? And we are going to share a way for you to go about doing it. But that is not the end, right? Because the report is only as good as it is. If there is no action being taken, it's as good as you not having done any planning at all, right? So that's really the first part. After getting the report, now I would like to introduce to all of us my wonderful team of comprehensive financial planning advisors, right? As you see on your screen, right? And they come from various backgrounds, and they do have a wealth of experience doing this. And we do have some who are younger, some who are older as well. And these are my client advisors who will be happy to bring you through the process of this comprehensive planning service. And they are also supported by a specialist advisory team. So today, if you have very specific insurance planning questions, right, we also have a dedicated team of client advisors who will bring you through the process, right, depending on what is your needs, what is your situations. And lastly, all our client advisors are being supported by our solutions and our financial literacy team, who I'm a part of this team, right? So we are all here to help you build towards your financial wellness. And I do strongly encourage all of us who are sitting in today, or you may be watching a recorded version later on our Facebook, right, to please take this opportunity to do this planning for yourselves. So what does this mean for you? Really, we're looking at helping you to build this financial wellness based on really sound and enduring principles, right? Because there are going to be different phases in your lives whereby there are different needs that need to be addressed. We want to help you understand your CPF, not just asking you to invest. We want to help you optimize what you have, right? We want to make sure that we keep your costs low, and my team will be happy to share, how do we go about, what are your various things that help us keep our costs low. And really, the gist of it is that we want to give you the confidence at Money Owl. You have the confidence that the advice that you are getting is high quality, and we are not conflicted, right? By balancing the best of the technological platform that we have with the human advisors that I have shared their beautiful photos with all of us, right? And really, we are here for the long haul. We are NTUC Social Enterprise, and we are here to walk with you throughout life's journey. And we would like for all of us really to take this opportunity, plan comprehensively, and live confidently towards your future goals. Now, remember I said I had 2 goodie bags, right? For those who are still with me, right, I've come to nearing the end of today's session, and I would like to now share with all of us today, especially for those who are attending this Facebook Live session. Now, we are offering some e-vouchers today if you do our comprehensive financial planning, or you get a term insurance through Money Owl. Feel free to scan the QR code on your screen, or go through to the URL that you see on your screens now, or you can just drop us a Facebook message right here as well, and we'll be happy to guide you through these 2 goodie bags. Just a quick disclaimer: these goodie bags are mutually exclusive, right? So you cannot stack them. So you have to decide which one is going to be the one that you are going to go for. And with that, I have come to the end of today's sharing session, and I would like to thank all of you who have very graciously joined us for this afternoon's Facebook live session. Now, for those of you who are still with me, it would be a very good feedback, or rather, I would appreciate, right? Well, we would really appreciate if you could leave us a word of feedback through this QR code. Let us know how we can do better for our future sessions, how we can better engage with you, and what you would like to hear in the future sessions as well, right? And with that, really want to thank all of you. I would like to thank my team as well in supporting me today, and hope to see all of you soon at our office or virtually in a call with my client advisors. Thank you very much and see you soon. Keep safe.